Well, let's talk of US markets first. Of course, we'll start off with the Dow. It was in the green, in fact, up around 0.28%, around a quarter of a percent higher in trade yesterday, but marginal gains across the board. There's not been any major fluctuation in trade on Monday. We're looking at the S&P 500, which was also up around a tenth of a percent in trade yesterday. The Nasdaq took a bit of a beating, down around 0.4% in trade yesterday, and couple of things in focus, right? One is, of course, the FOMC meeting, which is going to come in through this week, and the outcome of which will come through by the end of this week. So that's point number one. Earnings updates keep coming through, and that will influence markets going forward. But the key here is Walmart came out with its earnings, and its commentary suggested that demand seems to be slowing. Of course, with inflation coming through into the system, the demand in the US seems to be slowing down, and they've revised down some of their targets, estimates that they had provided in earlier quarters. They've revised down on all fronts, from revenue all the way till profitability, including margins. Of course, the increasing inflation not helping their margins either, and that post-market led to a bit of a beating down of some of these retail names, Walmart, Target, Amazon, and the like. So that saw a bit of an impact post-market in the US. So we're looking at US futures, which are slightly lower, around a third of a percent lower on the Dow futures as we speak. It was down nearly 0.5% in early trade today, so it's come off from those lows and receding slowly. Moving quickly on to where Europe stood. Europe was largely mixed. Again, the DAX was lower, but we're looking at the FTSE as well as the Stock 600 both in the green. The Stock 600 up around a tenth of a percent, not very meaningful. The FTSE was up around 0.4%, so the UK index really gaining up a little bit. When I'm looking at Asia though, as it opens, largely it was in the red or flat with a positive bias. That was at open. We're now looking at a consistent improvement through the day as the hours progress. We're looking at the Nikkei, which is down now just about 6 basis points, so absolutely flat with a negative bias. We're looking at the Shanghai up around 0.6%. The Hang Seng is up 1.25%. The ASX is up around a tenth of a percent, and the Kospi is up around a fifth of a percent. So we're seeing good green across the board, other than the Nikkei, which is trading flat with a negative bias at the moment. The SGX Nifty 2 is holding on to around a tenth of a percent in gains. So we're looking broadly at a tenth of a percent in losses. So we're looking at broadly slightly lower market, marginally lower, especially for India. Moving quickly on to oil. Oil prices are creeping up as we speak. They've moved from the $96 a barrel mark earlier today to around almost $98.50 a barrel. And oil prices will continue to go up. Of course, the Fed commentary is expected later this week, which will probably influence oil prices through the week as well as going forward, because that will possibly indicate where demand is at. Of course, we're expecting the Fed to hike by around 75 basis points at the moment, but there is still a likelihood of a 100 basis point hike as well, and which will most likely impact demand going forward as well. And then moving quickly on to gold. Gold was at roughly $1,720 an ounce, and it's remained there, and that's the key, right? Gold prices typically come off when the Fed hikes, but gold prices have come off quite meaningfully over the last couple of weeks, or even 3 weeks if I can call it. And that means that gold isn't declining in a substantial manner. The other piece of this jigsaw is, of course, the dollar index. The dollar index has come off. It's come lower to 106 at the moment. Just above 106 is where it stands, and that also has a positive impact on gold. So both those things influencing gold prices. Bond yields, which ideally should be creeping up, aren't at the moment. They're below that. The 10-year bond yield is below that 2.8% mark as we speak. The US 10-year is what I'm talking about. Lastly, on cryptos. Well, crypto has come off. Of course, the focus back on inflation targeting by the Fed will see cryptos come off a little bit, risk off assets. The Bitcoin is roughly at that 21,000 mark, which is 3% lower. Ethereum is a solid 4% lower. At the moment, we're looking at soft start from Indian indices, largely flat start, maybe with a slight negative bias is where we're looking at it at the moment.